Hello there traders, let's start our Sunday review, and today I want first of all to show you the best predictions from the previous market analysis for educational purposes, to understand and to fix in our memory how to make proper decisions in future. And then we will talk about grains, because hedge funds increased very strong short, extreme short in grains, and I want to make prediction in wheat. So let's start from British pound. As you remember, we talked about this market imbalance. Rather clear here that traders were involved. We see on the daily chart that previous highs were broken, and also we see this imbalance on 15 minutes chart. It happened after huge divergence of quantitative delta and volume delta. It was confirmed on Thursday, and on Friday, every day we see divergences, and to my mind, I see that the path of least resistance for this asset is now to the downside from this involvement. The target was really achieved. This previous low was for a bit but broken. It was broken by 2 ticks only, but it is enough. If we zoom the chart, we can see here huge delta imbalance was passed in this zone, in these few candles. And also if we open volumes, indicator total volume, we also see that despite very insignificant as in price movement, this breakdown, we see a lot of volumes and also maybe some involvement here. So it is enough for market maker to unload his sells. So to place his limit orders and absorb this bids pressure. So if your strategy is working with market maker, we should try to find such situations with clear imbalance and clear target. The second bright picture I want to show you is Brent oil. Please look now what backgrounds were before this prediction. These HFTs tell us that limit player observed the willingness to buy. According to the information about divergence of deltas, there is a high probability that the market will make one attempt to the downside from here. Brent oil, as you see, bounced from the technical zone of support, and we know when such pictures happen, then the price goes and knock out liquidity under the level. So to open good trade, we need 3 things. First of all, visible for everyone, supply or demand zone, supply or demand level. Here, that was very visible, understandable level for traders to open buying positions. Then we need divergence of quantitative delta and volume delta. It is a background for future manipulation. So we see here this divergence. And then we need entry point, some culmination of the involvement of buyers, which we got here. If the effort does not lead to the result, we can open sell position and wait when the price break demand zone. Of course, it is very difficult to catch the movement, all the movement. Only these pushing HFTs without any market reaction can help us not to exit. And to exit, for example, only when the price will fix above the HFT level. In these places, as we see, the price didn't fix above any of these HFT levels. This is a clue how to manage position during the trend. But the main target which we have is breakdown of the support. The next, we talked about Australian dollar. We see the rare situation when open interest rose significantly, and we see that hedgers and hedge funds added their buying position. So who went short? According to the disaggregated report, I can see here that asset managers with small traders went short, but leveraged hedge funds and dealers, they went long. if we look at only asset managers and small traders, we see that there was one attempt to go short here, and open interest was increased significantly according to the COT data. Then the market bounced from this level and made rejection. Here also, they wait that the price will break this demand zone. And according to Delta, we see only market buys. Every day, very huge market buys of Australian dollar. And I assume that this level is very important. If it will be broken, really, the market can go to the downside and break this level, this bottom, and lower even to this option strike. Of course, from here, probability is not so clear, because here market can still go to the upside. In fact, as you see, dealers and hedgers in Australian dollar won the game, and the price went really significantly to the upside. Jesse Livermore said to see the reference points from which the market will certainly make a significant movement. Sometimes you will be wrong, sometimes you will be right, but the risk-reward ratio in these cases is up to you, and if you buy, for example, options, straddle, strangle, it is also profitable strategy from these hot points. So finally we came to grains, and especially wheat. We see here that despite market lows, hedge funds continue to follow the trend and continue to increase their position. Really, open interest rose significantly and they added their shorts. Despite this, we had very peculiar reaction after huge block trades imbalance on the options market. This week I plan to release a video about block trades, about options instruments. Not to miss this video, please subscribe to the channel and make the bell active. What do I see, traders, on the lower time frame for now? We have a tick imbalance and the HFTs after the market close above some technical resistance. Before this, we had the divergence of deltas. So from this point, to my mind, the path of least resistance is to the downside and to break this demand zone. As for me, it is the most probable scenario in this case. We see in corn also addings of open interest and also addings of shorts in hedge funds positions. The market closed above the level, above the technical support, and many traders went to buy grains, to buy corn. In this case, a very high probability to liquidate some passengers before the market will go higher. And in soybeans also we see the picture where hedge funds increased short position and the market closed above very strong technical support. The similar picture in all grains, and on this basis, as I consider the market from the point of market maker and his privilege on this market. So he often opens his positions not according to the favorable prices, but against the massive willingness to buy or to sell. So traders, if you want to look on market as a market maker, if you agree with this approach, you can subscribe to this YouTube channel, Volume Trader, and if you still don't have the platform for volume analysis, you can download for free Trading Volume Terminal and try to use it. Also, you can write to our support and to ask some help if you don't understand some tools. So I wish you good trading week and see you on the other side the next week. Goodbye.